Let's go to CommSec for a look at the markets today. Tom Piotrowski, good morning to you. How are we shaping up today?
Well, Pete, we're going to kick off ever so slightly in negative territory according to the SPY futures, reflective of the final stages of the US session, which has got the US markets just in negative territory. The Nasdaq doing a little bit better by comparison. It's just in, I beg your pardon, the negative outcomes for the Dow and the S&P 500 and a slightly better outcome for the Nasdaq. But the reality is, Pete, we are moving into an important stage for the markets because you've got the end of the month and the end of the quarter, which are very significant periods if you're managing money. So you do tend to get a little bit of volatility, and that's combined with the fact that you've got a holiday shortened week this week, which can take the volume out of things. So probably not the sort of moves that you'd hang your hat on. Investors are really pensive in the US because of the important inflation reading that we have at the end of the week, which lands on a public holiday, so they won't have an opportunity until next Monday to respond to it. So they're very much focused on preserving the improvements for the quarter, which in the case of the Nasdaq and the S&P 500 are approaching double-digit gains, so close to 10% gains for the quarter, which is quite outstanding, particularly when you consider that the local share market's only up by 2.5% by comparison. So that brings us to the local picture today, an important one because we get the monthly inflation gauge. So this is the report that contrasts to the quarterly report, not as fulsome in its examination of price pressures. However, it has still got inflation in the title, so investors will be paying attention. The number to look out for, Pete, just to make it easier for getting on with your life, is 3.5%. That's the annualized pace of headline inflation that the market's looking for. Anything north of that is actually not going to be terribly troublesome in terms of the outlook for interest rates. It would have to be a very big move on the top side to have the prospects of a rate hike now brought into the picture, because there is a firm belief that we are closer to a rate cut than anything else. But if you're seeing moderating growth, as we are at the moment, and elevated inflation, that's not a welcome outcome.
Okay, comprehensive. Tom Piotrowski, thank you.